Hey everybody, welcome to Wealth Wednesday. It's a new webinar series that's hosted by Inspired to Invest to discuss all things related to abundance, prosperity, and wealth. So it made sense today to have Mauro Arturi here from Experior Financial, who is the executive director, not the CEO.
Executive partner.
I made that mistake recently, executive partner. So I got flagged on that real quick. But Mauro is a 25-year veteran of the financial industry and a senior national executive director and coach for more than 2,000 financial associates at Experior Financial Group. And I've actually known him personally for 20 years, and we have a funny story that we'll save for another time. As
That, that's a long time, man.
Yeah, it's been a long time, just a couple decades. But
Yeah.
as the head of the top branch in one of the fastest growing MGAs in North America, Mauro plays a pivotal role in the success and expansion of Experior Financial Group. He's known as a ground shaker and deal maker who makes it rain. And Mauro's true strength lies in his leadership. He believes that success is built on the strength of your team. And he takes a lot of pride in being a coach, teacher, mentor, advisor, and speaker at Experior Financial Group. Under his leadership, Experior has grown financially. Experior Financial has grown significantly. I can't even talk today. By offering superior financial products, competitive compensation, and comprehensive training. The company also provides individuals with the unique opportunity to build and run their own business, making Experior a leader across North America with more than 8,000 agents, I think was the last headline that I saw.
Yeah. Yeah.
So we're going to be going through some questions for the first half, but I would encourage that anyone that's joining us today, if you have a question or something's come to mind, make sure that you just ask it. We don't necessarily have to wait until the very end when the moment has passed. And I'm just going to read a really brief disclaimer as well, just for compliance. The
Mhm.
views represented on this webinar are for general information only and do not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest and Wealth Wednesdays makes no representations as to the performance of any particular investment. And should you decide to make any investment, you're responsible for conducting your own review and analysis. It's recommended that you obtain legal, accounting, and tax advice from licensed professionals before you make any investment. So without
Wow.
further ado, Mauro, thank you for being here for today. And thank you
Thank
for
you.
joining in.
Yeah, that's awesome. I love the fact that you did put a disclaimer there because we got to make sure that people do their due diligence before they actually take any advice, whether it be for me, you, or anyone that's on your show. So I really do appreciate the
Yeah, and I think that is important. I know when we connected a little while back, I talked about some of the crazy things that have been happening in the real estate investing world. And I think now more than ever, due diligence is so, so important. So you want to make sure that you do talk to someone that's got experience under their belt and they fully explain everything to do with investments and, ideally protecting your financial future. So
right.
obviously this focus is on mindset, abundance, prosperity, and all of those things kind of wrapped up. So maybe we can get started with things like mindset and abundance if you're cool with that.
Sure. Yeah. Good to go.
All right. So in terms of my first question, obviously things have been, we hit through COVID and everyone thought that was crazy. And it's like, no, wait, the worst has yet to come.
Yeah.
And then the last couple of years were even more crazy, right? So we've gone through this really crazy, challenging time in economic downturns. So my question for you is, how would you stay focused on abundance during these challenging times, or for someone that is really struggling financially right now, considering all the things that are going on?
Well, that's a great question, Serena. The main thing is you need to shift your focus. Okay, so you can't get caught up in the negativity. I try desperately not to watch anything as far
No
as
news.
yeah, the news is so negative, and and that's what they sell is negativity.
Yeah.
And you tend to, especially if you're not well versed in the financial services industry and the economy, you get caught up in that, and you get really nervous about things. And you got to understand that the economy is always going to be up and down. It's going to be challenged. You got to focus on what's good. So
Yeah.
if you have a job, it's great. Be grateful and have a attitude of gratitude that you're working, and understand it is temporary. But you have to make sure that you still stay diligent to what you're doing when it comes to planning your financial future, and not let the hiccups, I call them, or the roller coaster ride of the economy affect your end goal, because that's the most important thing.
Yeah. Now, in terms of gratitude, since you're just talking about that, where do you think that really comes into play when you think about building your financial future and wealth and prosperity? Like, how is that something that you incorporate regularly into your own life?
Well, it's essential, right? Your mindset of going from scarcity to abundance.
Yeah.
You have to always think about how good it's going to be, right? No matter where you are. Like I grew up in the project, well, I guess government housing. You can call it the projects, whatever you want to call it. So I had no sense of abundance or anything, but I always tried to stay positive on what's next.
Yeah.
What's next, right? So having that attitude of it's not always bad, right? Think about the things that are really good in your life, and it has nothing to do with finance. It has nothing to do with the car you drive or the house you own or anything like that. You got to think about the good, positive things that are in your life, and then what I think that manifests a lot of good things around you,
Yeah.
and it introduces you to opportunities that you never would have had if you were just sitting in a corner somewhere being negative, thinking about how everything sucks and like, not feeling grateful for anything. So at the end, and it's hard, at the end of the day, Serena, it's hard. You can't just, I'd be lying to everybody saying that it's easy to just suck it up, princess, and let's go. No, you really got to dig deep sometimes, and I don't care what level of success you are in life. There's those doubts you have on a daily basis that sometimes you just got to dig deep and say, okay, we're good. You have that self-talk, not negative self-talk because that's detrimental to you, but just that thing, hey, we're good. We're just going to keep moving forward. So I think it's essential to have that attitude of like I said, gratitude, where you have to be happy about the stuff you do have,
Yeah.
but don't settle for what you have.
Yeah, yeah, I agree. And I mean, I think at the end of the day, your mindset really shapes your reality, right? So even when you are going through those challenging times, you have to know that the only way out is through, and it's not going to help you. Like if you need to dwell on it for a day, that's fine, but don't let a day become a month and a month become a year. But you said something really interesting there, just in terms of your background and how you grew up in the project. So maybe we can dig a little bit deeper into that, because obviously I find it helpful to bridge the gap between where you were to where you are.
Hmm.
And even now, like when you shifted from your past role into Experior, like, how did those shifts, really explode your growth and take you to where you are now? So maybe you can just walk us back through, your history a little bit more.
Yeah, sure. When I say the projects, I don't mean like we weren't poor or anything. We just didn't have much opportunity. And being an immigrant family, like most people, you start off with very little and a simple life. But I never let it determine where I was as far as a human being or the value I had. Did I miss out on things growing up? 100%. Did I wish I had more money? Yes. Do I wish I had a car when I was 16? Absolutely. Those things that we all think that are important. But honestly, Serena, I just kept moving and surrounding myself with people. It kind of sounds weird, but I didn't even purposely seek out people that were positive. I just was drawn to people that were positive,
Yeah.
and it just helped me and introduced me to other things. So I was in my previous company, a little bit of history, for 19 years, and I had some good success there and everything. But I had blinders on the whole time I was there, right? I was like, this is the only thing that exists. I'm 100% in, and which is great to be 100% committed to anything that you do. But without seeing what else is out there is also it's not a good thing for you as a person to grow into something different, because you have to understand that everything can be better, everything can change, everything can improve. So rather than just accepting it, my partner and I, we looked at a different company, which was Experior, and we were just, it's like our minds were just blown. It was just like, oh my gosh, what an opportunity here.
Yeah.
We can still do what we want to do, but the vehicle is so much better. And our lives changed, but it wasn't just about our personal lives. It was about the people that we brought along with us, the people that that followed us. And I think that's more important too. I think I can say for myself anyway, Serena, is I don't think about how things are just going to affect me. I always think about how it's going to affect others around me. And in doing so, it takes the pressure off of me to be the greatest, the smartest, all that kind of stuff.
Yeah.
I just want to be a servant leader. Branson, who's the owner of Virgin Airlines and records and all that kind of stuff, he said, because he has ADHD and stuff, he says his success is because is based on the fact that he put people who were better at doing things than he was around him. And I've been blessed to be able to find those people. You
Yeah.
know, was it easy? No, because I invest a lot of emotion into it. I invest a lot of time into that,
Yeah.
but it's definitely worth it. It's definitely worth it. So yeah, coming from a place where you have not, if you always think I have not, you're definitely going to continue to have not. So rather than thinking about that, just be happy, do your thing on a daily basis, but have a goal, have a vision
Yeah.
of moving forward. And sometimes you have to borrow someone else's vision, right? Because sometimes we don't have vision. At the end of the day, like I said, you walk around with sunglasses on or blinders on, you don't really see what else is out there. So you borrow someone else's vision and you kind of like piggyback on that for a while until you can actually see it happen. So,
Yeah, and I think that's your point. Like sometimes you just don't know what you don't know, right? So you were kind of going down this path with your blinders on, like you said, and you just may not have realized what other kinds of things are out there, right? And I think it's important to walk that line between asking the right questions and just exposing yourself to different concepts and opportunities, but then also remaining focused to get where you want to go, right? There was someone I actually did his podcast a while ago, and he had put up a post that said something like, if you try to catch 10 rabbits, you're not going to be able to catch all 10. But if you go after just one, you'll probably be able to catch it, right? So it's like you have to expose yourself to those concepts and find out what's out there and then really focus and get laser focused on what you want to get and how you want to get there, right? So
yeah.
it's just trying to figure all of that out.
Yeah, 100%. You can't be, what do they call it, jack of all trades, master of none. You still have to be focused on what your end goal is,
Yeah.
but understand that there's other ways to attain that goal. It's not
Yeah.
just one way, right? You have to be open to listen to other people, especially because, I'm a little bit long in the tooth. So I joined the industry when there were no computers, when there were no, budget.
The old school way.
Yeah, right. It was all
Yeah.
on a napkin, and it was all just like right now the information that the younger generation has. Oh my gosh, it's
And the
like
tools, yeah.
and the tools. It's just like you have to be open to other ways of doing things,
Yeah.
and then just sticking to, well, this has always worked for me. Then that's the only way to do it. That's the bad way of thinking. Right?
And there's a lot of efficiency, and I think a way to really explode your growth, because I know when we were talking, like, you used to be driving all over the city, meeting with people and stuff like that. And even with the pandemic and adapting to things like Zoom, then instead of maybe meeting with two people in a day or four people, you can meet with like eight, and that's just kind of talking at that level where you're transactional.
Yeah.
But when it comes to building your team and just again, what that looks like, why would you say Experior has presented such a robust opportunity, maybe compared to the path that you're on before?
I'll tell you because it's Experior is a company that was built by advisors for advisors. So we were blessed enough to know that Jamie and Leanne was with and that's the co-founders and CEOs of the company. And we were blessed to know them in our previous journey. And they realized that, you know what, there's a better way to a better way to build the mousetrap. And what they did was they took the best of three different industries. So not industries, but different models. So we took the captive model, which was the Sun Life's Investors Group and everything, where you work for a company, the training is good, and the name recognition is great, but you don't have any kind of ownership. You don't have any kind of that kind of stuff. So,
Yeah.
and really you're just working for someone. And then they also, when they left our former company, they went into the MGA world, which is a managing general agency, which is basically a brokerage world where now you have multiple products, but you also have better comp, ownership of your book of business, all that kind of stuff. And then they went, and then because of where we came from, the network marketing kind of, distribution aspect of the business, they brought that in also. So where you can actually build a business within a business, and they combined all three together. So not only are we able to attract people brand new to the industry, we're also able to attract veterans that are from the industry, and we're also able to attract people that are just looking to sell and make and not build a business. So at the end of the day, we were able to do all that. I was able to do that through Jamie and Leanne and Experior. So that's what makes us different, and that's why we're growing so quickly. Like, we are by far the fastest growing MGA and IMO in the US right now. So we were and I know you said we're at 8,000, but I just want to put that in perspective for you. Last year, this time at the beginning of February, we just crossed over 4,000 licensed agents, because you'll hear a lot of companies say they have 30,000 agents, they're not licensed, right? So we don't like to put smoke and mirrors, and we like to tell the truth. So at the end of the day, its licensed agents was 4,000. And fast forward 1 year later, Serena, we doubled it to 8,000.
Yeah.
1 year. So that is serious growth. And that's because and it's not just because of comp, because you can get, every time you go out there, you can chase compensation anywhere. You're always going to get better somewhere else.
Yeah.
It's the environment, it's the culture that we've created, that we actually care about you, the individual, not just how much business you're writing. So I think that's a big reason why Xperia has exploded over the
No, I'm
next.
familiar with the concept of like affiliate network marketing. I was with EXP for a long time, and I just felt like, if you're going to be doing the same work, it's like you're paying less but getting way more.
Yeah.
It's just such an interesting concept. And as you grow your business, it was even something that develops passive income. It's willable. People were getting on stage at the rally and like crying because they'd, paid off their parents' homes or retired their spouses and stuff like that. So it's very powerful in that sense. And even with the Wealth Club that I'm part of now, like we've kind of created that affiliate marketing strategy. So as we continue to grow and build the membership and stuff like that, there's value for people, obviously bringing people into that network and being able to learn and stuff like that. But can you talk a little bit about, that network marketing concept for someone that's joined us, it may not be totally familiar with what that really means?
Well, basically, it's allowing people to have the same opportunity you have in building a business within your corporation. So a lot of people, like, they say it's multi-level marketing, or it's a pyramid scheme, and obviously those things are.
Sharing the wealth.
Yeah, that's not what we are, obviously, because in a pyramid you have to, and in multi-level marketing you actually have to buy a product to become part of that network or whatever. Here it's a professional brokerage where you got to get licensed, but at the same time you can go and hire and train your own agents and get compensated on that. And the best example of that, Serena, would be a real estate brokerage.
Yeah.
So you have the broker of record who's going to own that office, the RE/MAX office or whatever it is, and he or she is going to have 10, 20, 100, 1,000 agents like EXP. And every time they make a sale on the house, that brokerage is going to get a piece of that. Okay.
Yeah.
So the difference in our business model is it's not just the broker that gets all of it. It's the person that actually helped develop that new person that came in, trained them, help them, guide them, and all that kind of stuff. They get rewarded for making that person profitable for the company.
Yeah.
And right now it seems like, well, does that mean you're making money off of what I do? Well, the reality in life is anything you do, someone is making money from.
That would be like any business. You wouldn't be in business if that wasn't part
Every
of it.
business is like that. It's just you don't have the opportunity to do it yourself without a bunch of capital invested and all that kind of stuff. So we've allowed people to be able to get into the industry, to learn the industry, but also build a business and get that residual income. And in financial services, you don't have to build a hierarchy, or you don't have to build other agents in order to get residual income. We're blessed that our industry has renewals and trailers and all that kind of stuff from insurance and investments.
Yeah.
And if you're not thinking about immediate gratification long term, you're going to get great returns for your investment, because I still get paid today for clients that invested with me 20 years ago.
Yeah.
That's unheard of, right? I have very successful mortgage broker friends who make millions of dollars and are very, very successful. And they say to me, I love your business model. I'm jealous of it because you still get paid for stuff you did years ago, whereas I have to get the mortgage renewed every single 3 years or 5 years or whatever it is.
Yeah.
And that they're always chasing the next rate, whether it's lower or whatever, or their friend got into the industry or whatever. So yeah, so we were able to protect our business model that way, to the point where you're eventually 90% of your income is residual and passive, which is, I believe, everyone's dream. Like, we think about it when we talk about just financial services and investing money so that by the time you retire, you can live off of that money passively.
Yeah.
without having to work. It's the same thing as building our business. So I'm building a business until it's going to create enough income for me so that I can step away from it, and it's going to create that residual and passive income for me. So
Yeah.
that's the attraction, I believe, that
Yeah.
experience. Yeah.
Yeah, no, and it's a great way to build a foundation because obviously usually people have to take their after-tax dollars and invest it that way into different vehicles and stuff. And this is kind of just built into what you're doing already.
Yeah.
Now going back to that concept of wealth, what kind of advice would you give to someone that's just starting out and they're working towards that? Like, not everyone's built to be a financial advisor. Not everybody is interested in, that kind of role. So just in terms of traditional wealth building, what are some of the tools that you have available that you would suggest to someone? And maybe especially when it comes to like a business owner or something like that, they don't have a pension to rely on. They're probably not putting into CPP. Like, what do you think are some of the best things that they could get started with?
Yeah. Well, for the everyday person, actually for anybody really, it's do it now. Don't procrastinate. Don't wait till you think that you're ready to invest. I wish that I knew what I know now when I was 16, because I've been working since I was 12, but I never invested my money. I never saved my money. I spent it. I got money and I spent it. And it would, whether it be at with friends or at bars or whatever it is on dating or whatever it was, I never really saw the value in money. So starting off really young, if anyone has children or nieces and nephews, make sure they start right away. And it could be just 25 bucks a week, or 50 bucks a month.
Yeah.
And that will eventually grow to something to by the time they're in their 30s could be a healthy $100,000, $50,000 or anything like that. But you have to learn about finance, educate yourself about how money works.
Yeah.
Biggest challenge is most people, because they don't know how the rules to the money game, they'll go to the institutions, and no knock on the banks or anything like that, but they're transactional. They don't really care whether or not you're making money.
Yeah.
Whereas in our business, our my income is correlated with your success, right? So the more money you make, the bigger my commissions are or my trailers. So I'm going to have a vested interest in you making money. I'm not going to just stick you somewhere so you're not making any money.
Yeah.
So make sure you learn about the different vehicles that are out there. Not a GIC. Most people invest in guaranteed investment certificates because they think it's safe, but the reality is you're going to outgrow and outlive your money if you do that, because inflation is higher than what you're getting on that return anyways. So compound interest, make sure you're investing on a monthly basis to catch the highs and the lows of how the markets are. Because like right now, everyone thought because Trump was going to get in, the markets were just going to soar, and they did for a couple of weeks.
Yeah.
But
And he
politics
wanted to take over Canada.
well,
And then everything changed.
that's for another topic. But at the end of the day, it's politics, so it goes up and down, right?
Yep.
And if you're only investing at one time, then you have to submit yourself to those ups and downs. Whereas if you're constantly investing, you're taking advantage of those low times in the market. So learning that kind of stuff, learning about different types of insurance products, especially for business owners, how to get money out of their corporation. And this is a little bit higher level, but getting money out of their corporation and funneling it through an insurance plan so that later on they can liquidate that insurance policy to capture that money with very minimal tax.
That's something I just want to jump in. It really, I think, speaks to the quality of your financial advisor. And I just mentioned that because I actually had a whole life policy, which I now know is, known as infinite banking. And the advisor I worked with really didn't explain that, I think, the way that it should have been explained to me at the time being a business owner, right? And really how powerful that can be to really, borrow against your own policy and how you can leverage that and how that's really beneficial as a business owner. So I think I had it for maybe 5 or 6 years, and I just was like, oh, I feel like I'm overinsured. I don't need all this additional life insurance, and canceled it. But what I should have, like, I just didn't understand like how it was. And even I think when I looped back with him, like long after the fact, I don't think he even had a really good grasp on it. Like he was just really more traditional in a lot of senses, right? So there are so many things out there, and I think that's why it's so important, because you don't necessarily know all the right questions to ask, right? And it helps to kind of get those different perspectives and really outline where you're at and where you want to go, right? Because I think that was like a lost opportunity that, to your point, like if you knew then what you know now, I'm like, like, this could have been
Well,
really.
and the thing is, to speak to that, Serena, is in our industry, it's easy to get a license. And to be focused and on just selling one product or maybe two products or whatever,
Yeah,
because that's what you know. And that's what I love about Experior is that we have people that manage millions of dollars of assets, really know the insurance part of it. Our
yeah,
even we have some of our business development partners in head office, Sean Redford, who's been in the industry for over 25 years. He's really well versed on how to help high net worth people. So,
yeah,
being with a company that only services one aspect or one demographic
yeah,
is detrimental to growth, right?
yeah,
The company I was with before only served, new people to the country or average people, which is fine. That's the biggest part of the population. But when it came to servicing other people, like business owners, like you were saying, I didn't have the capability or the knowledge to do that.
yeah,
So it's like I've left all that money on the table and I've
yeah,
left that opportunity for that client to educate them properly
yeah.
because I wasn't open to other different products and things like that. So it's
Yeah.
very important to make sure that not you as a consumer only, but the person that you are working with is well versed in multiple areas of financial planning, not just or wealth building or insurance planning or
Yeah.
whatever it is.
And that's
So
the thing, I think, like from an insurance perspective, like, yes, it's insurance, but it's understanding the investment opportunity that's attached to that by overfunding your policy and where those advantages can kind of come into play. What are your thoughts on having like an infinite banking policy for like your child?
again, when it comes to that kind of stuff, everything is done based on needs based. So the one thing I love about what we do is we do a needs analysis for every client.
Yeah,
So we need to make sure that when it comes to their kids, let's say they've maxed out their RESPs, even though, people don't like the fact that, but it's a 20% return guaranteed from the government
yeah,
every time you put money into an RESP, whether they use it
yeah.
for school or not, it doesn't matter. You're still getting the growth on that, that money that they're contributing on the grants.
I was
So
gonna
you
say,
know,
so for anyone that doesn't know, like if you put in $2,500 a year into RESP, the government will put in an additional 500. So it's something we've been doing for our daughter. So she's got her little nest egg started already, but not everyone necessarily knows that.
right, and you also get the growth on that. So Serena, let's say your daughter at 18, 19 years old says, I just want to sell real estate or I don't want to go to school or whatever. You're still going to have access, or you or your daughter is going to have access to all that growth.
Yep.
Put it into her RSPs, you just have to pay back the grant.
Yeah.
So,
Yeah.
there are advantages to that. So I would definitely not talk about giving a child a permanent whole life policy until they've done that, until you've done the breakdown and then the needs and stuff like that.
Yeah.
But that being said, there are a lot of grandparents that want to give this to their grandchildren as a gift for long-term, purchase of a home or just having the insurance and the cash value there for the long term. So yeah, it's basically we don't do anything unless it's needs based selling, right?
Okay. Yeah, I just wanted to understand your perspective on that.
Yeah, for sure.
Now, before we go into some questions with everyone else, I just have one or two for you. Just when it comes to things like philanthropy and giving back, what role does that play for you when it comes to achieving true prosperity?
I honestly think no matter how much wealth you have, no matter how successful you become, and please let's preface this as with everybody's definition of wealth and all that stuff is different, right?
Yeah.
It could be $100,000 a year, it could be $1 million, it could be 10 million, $1 billion. I don't know, whatever it is. Whatever it is, though, you have to give back. And how do you give back? Sometimes you can't give back when it comes to money because at the end of the day, it's expensive to live in Canada and in the GTA. So you have to try and take care of yourself, but also, give back in ways of maybe your time or
Yeah.
give back in like I said before, your positive attitude. Just being happy and spreading that alone is, I believe, giving back.
Yeah.
It doesn't always have to be a dollar figure. But that being said, the biggest satisfaction for me is when people are in need, and without them even asking, you can just ask them, how can I help?
Yeah.
And that could be charities, that could be whatever it is. I do donate myself to many charities. I'm part of a foundation that helps adults with learning disabilities that I sponsor on an annual basis.
Yeah.
And even something that the church every winter uh, gives out sleeping bags. So I'll buy a van full of sleeping bags.
Yeah.
And it's not expensive, it's not crazy, but at the end of the day, 300, 400, 500 bucks goes a long way to people in need. And it's not to make you feel better, it's just to know that it's not just about you, right? And that I think is very important to the future. And I hate the fact that when people say to me, well, those people can afford it. Well, those people don't have to do it. Right? Like when you look at hospitals that get donations of $10 million to put on well, that's because $10 million is nothing to them. Well, it's still $10 million. They still have to make that decision to give it to that hospital or to that church or to that orphanage or whatever it is. So, at the end of the day, it's just because you have money doesn't mean you should, or I'm sorry, you have to invest. Most people who do that do it because they know that is the right thing to do. And most people don't know that you're doing it.
Yeah,
right?
for sure. I mean, I had a mentor once that said that true wealth really amplifies who you really are. So if you're naturally like a scumbag and really rude to people and really greedy, having money will amplify all those qualities. But for someone that is a good person, wants to give back, wants to share in those, that wealth and opportunity and help people, money will just give you that vehicle to be
we
more,
have
right?
our saying is good. Money makes good people better and bad people worse.
Yeah, 100%.
That's
So on that note, we'll open it up. I know that a few more people have kind of joined us. So if anyone has any comments, just reflecting on what Mauro has talked about or any questions about wealth building, now's your opportunity. So the floor is yours.
I have a question.
Yes, go ahead,
Sure.
Francesco.
Hi. Regarding what you said earlier about life insurance policies, about whole life policies. So I kind of missed, what's your take on the whole life policy versus term insurance in terms of what would be more suitable for somebody to have?
Again, it's all based on needs. So you do a needs analysis first. So if someone needs a lot of insurance, like at a young age, for a mortgage and debt and all that stuff, then the cost-effective way of taking care of that is through term, obviously. Term is the best product for the average person out there.
Okay.
That being said, I sold term insurance only for most of my career, and then ended up having conversations with my clients in their 70s when that term was renewing, that they could no longer afford that term policy. So I believe that you have to have a good mix of everything in someone's portfolio when it comes to insurance. So you have a majority of it is term, and if they've maxed out their TFSAs, RSPs, and other tax effective vehicles, then you put either a UL or a whole life small portion in there, so that at least you have that guarantee of coverage as you get older, and then make sure you have critical illness or living benefits, because the truth is most of us are going to get injured or ill before we die. So so it's a healthy mix of all three, but mostly going to be term for sure.
Would you not that I don't know how long this would take, but would you be able to explain a little bit about what you mentioned also about using your whole life policy to pull money out to
borrow
use
against a policy?
Yeah, how does that work?
Well, there's a few ways of doing that. And again, that's not for the average person, Francesco.
Okay.
It's more for a corporation that has a lot of money sitting in their dividend account that just sits there, and they have no access to it unless they take it out as income. So what you can do is you buy an insurance policy through the corporation that's going to eventually grow a cash value because you're over contributing into it. And then later on, you're going to collateralize that policy through, let's say, easy example would be Manulife. Manulife sells the policy, but they also have Manulife Bank, which they'll give you the loan up to probably 80 to 90% of what the cash value is in there. And then that loan, you can either pay interest on it, only don't pay anything on it because it's secured with the value of the policy. And you as the owner of that policy, you can take that cash value and start using it for retirement purposes, investing and all that kind of stuff.
Okay. So that's more for like somebody in a corporate setting, not necessarily a personal.
Not necessarily like for anyone that has a business, right? Like the way
Yeah.
that I kind of looked at it where I lost that opportunity is that I had that policy personally. What I
Yeah.
should have done is set that up through my holding corporation.
Okay.
And I would dividend money from my operating company up to my holding corporation. Because if I was intending to buy a property anyways, you could put that money into the whole corp, put that into the policy, borrow against the policy, buy the
Policy.
property.
Yes.
It's
Okay.
kind of convoluted. I know it's very.
Yeah, it's a circle.
explain.
Yeah, it's just
Yeah.
a circle of transactions.
Yeah,
Yeah.
it's just a more effective way to kind of build up the policy and also I think down the road when it comes to legacy planning and things like that, there's other advantages to having it structured that way as opposed to just taking the money and buying it out. Like I talked to someone once that had a really good example. He's like, if you want to eat, he goes, if you plant an orchard, when you're ready to harvest the apples, are you going to chop down the orchard and eat the apples, or are you going to pick the apples? And he kind of compared having that whole life policy in the same way that you're just harvesting the apples, you're not cutting the orchard down. It's not like you're paying yourself buying things, you're just repurposing it in a different way to be more strategic and effective.
Okay.
The most important thing, Francesco, are you in the industry?
No, you know what? I just got into just for learning purposes. I don't work. I'm a realtor. That's what I do. But I just got my license for life insurance, critical illness, annuities. I just wanted to learn something new, just for that purpose. So I'm still I'm as green could be.
Yeah, good.
In
The
this.
thing you need to know, Francesco, especially in our industry, it's very regulated, and you have to make sure client comes first. So just because the product sounds great doesn't mean it's for everybody. Okay. And you got to be careful about that because a lot of people are selling products that aren't suitable for the client. And selling it based on the fact that they can take money out later on, and which is great. Those things are part of the policy, yes. But we do have things in Canada and in the US. There's like 401ks and here we have TFSAs and RSPs. Max that stuff out first, and then whatever extra money you have, you can start putting towards those types of policies.
Okay.
But yeah, you got to make sure that the client's needs are taken care of first and foremost.
Yeah. And I think you have to understand different caveats, right? Like with RSPs, for example, like you may feel different about this moral, but I personally am a little bit averse to them. Like unless you really have so much income, just because of different things and caveats that can happen later, right? So the whole point is that they're tax deferred. But what if you get to the point that you actually don't end up living through your retirement where you can take out that reduced amount over 20 years? Like for my mother-in-law, for example, she got sick when she was in her mid-60s and passed away. And knowing that she was sick, she had to take all that money out. So you can imagine the tax impact and all of that. And if she hadn't, there's just a very significant tax impact on your beneficiary as well. So I think sometimes those have really been promoted and encouraged. And obviously the TFSA is like a different opportunity for people, right? But I think you just really want to understand you may reap that benefit now by the tax advantages, but you want to know what the consequences are like later if your plan doesn't go according to plan, if that makes sense.
Right.
So
Well,
maybe
that's
just having
why,
the balance between the products as well.
exactly. And that's why you will have a critical illness policy versus having to go into your RSPs to help you during a time when you're ill. You actually get a lump sum from a living benefit or critical illness.
Well, I meant she actually passed away. So like we knew she was terminal and she had to take everything out and she wanted to deal with that before, like she didn't want to leave that to the estate to deal with. So yeah, it was a very significant impact because she was a high income.
Well, and that's when you need a whole life or a permanent plan that's going to take care of the tax implications.
Yeah.
But that being said, you still should invest in an RSP for the same reason why.
I'm not saying don't do it at all. I'm just saying like you want to consider the balance and understand like those consequences, like if things don't go according to plan, right? So
you're right. But again, you have to make sure that's what planning is about, right? So I'm going to put RSPs in place. I'm going to put TFSAs in place, but I'm going to make sure I'm also going to have something that not only takes care of my debt, but long term, if all that stuff falls apart or my health falls apart or whatever, I have something that's going to take care of the tax implications for my kids, my grandchildren, and whatever. But that, again, that being said, I know we're going to probably disagree
Every
to
situation's
agree to
different.
disagree. But with RSPs, you still have, whether it's a big tax return or credit or whatever, you're growing that money tax-free during the time where you're making peak income.
Yeah.
So even though you're going to pay taxes when you come down, don't forget that you're also getting the growth on that money, right? So not only are you getting the tax break, but you're getting the growth on that tax
Yeah.
break. So yeah, there's so many different ways to do it, but yeah.
What are your thoughts on the S&P? Francesco, I don't know if you're on the call, but we had a billionaire named Mark Wade who was on one of our calls recently, and he was talking about, if you had $100,000, where would you put it? And he was talking about the S&P. So I don't know a lot about it, so I'm just curious to know what your perspective is on that.
Yeah, there's a lot of people that just do like index trading where it's the S&P just follows the top companies that are on there, and long term you're always going to make money in those types of investments.
Yeah.
The challenge with it is, and it's not a challenge because again, it all depends on your investment objective and what you're looking for. It's not actively managed. Okay, so there's actively managed portfolios where you have a fund manager with his or her staff of 150 analysts who go out there and they research companies, have a certain criteria, sell when they need to sell, buy when they need to buy, all that kind of stuff.
Yeah.
And you pay for that with management fees, obviously.
Yeah.
But in my experience in 20 some odd years, I've never gone wrong with that. My clients have always done double-digit returns,
Yeah.
not every year, but long term. And they are also, the fund managers are also have a vested interest in you growing your assets because they get paid based on AUM, which is assets under management. Whereas the S&P, you're pretty much at the mercy of what's happening in the economy at that time.
Right.
If the S&P
So it may
drops,
not be good if you just want to put it in for a year, for example.
well, yeah, exactly. Well, I don't think I don't really do any investments for less than 3 or 4 years in the markets. And that's when you would do a GIC or maybe a high interest account, but the markets are too volatile for short term, I believe. But the S&P, just like any index, is going to be subject to what's happening in the economy. Whereas if you have someone who's actively managed funds that are on the S&P, so they're going to be affected, but there could be funds in there that you've never heard of. There could be companies in there that are publicly traded, small little mom and pop companies that in Utah that grow, I don't know, potatoes or whatever, and they're making a profit, right? They're doing well, but you don't know that if you're just with just the index. So there's a balance in both. Again, I can't express more how important it is to make sure anything you do is needs-based in my industry. And I'm sure even in real estate too. You can't just go to say, okay, what do you want? I want a 3,000 square foot house. Well, what does that mean? Right? Like what do you want in that house? What are you looking for? It's all based
All
on
about the details.
Exactly. So it's hard to say, Francesco, there's no blanket thing, right? You can't say term is great for everybody and whole life sucks for everybody, and you can't do that, right? When you do that, that makes you ignorant, and ignorant doesn't mean you're stupid. It just means you lack information, right? You can't. And as an advisor, whether it be on real estate, investments, or insurance, you can't be that way. You have to be open.
Okay, thank you.
Yeah, no problem.
Jacqueline, you turned on your camera, so I thought you might have a question if you want to jump in.
No, I was just listening to the difference between what's available in Canada versus the US. I think what you guys were talking about is more on our US side would be investing in an IUL, which is like one of my favorite. I wish somebody told me about that like years ago because it's
fantastic.
Yeah, the way it performs. And I made sure coming into the industry that that's something that my children have, because I just what they're going to be able to fall back on is just incredible.
Yeah, Jacqueline, you're right. And again, Jacqueline, you're with us, aren't you? Are you experienced?
Yes, I'm with Jor.
And you're in the US.
Yes.
Oh, Jacqueline, I know Jacqueline. Yes, thank you. Okay. Yes. We just signed your paperwork.
Yes.
Okay. So yes, in the US, Serena and Francesco, you here in Canada? Yeah, in the US, they have
Sorry,
some,
Toronto.
Toronto, yeah. In the US, they have some seriously good products that I wish we could have here. If we had an opportunity to have IUL here in Canada, it would be so beneficial to
And what is that exactly?
the consumer. It's basically a universal life policy,
Okay.
but it's attached to an index, which there's guarantees that you're not going to lose your money.
Yeah.
It's just so it's to put it in a simple word, it's investing in an insurance policy, but you're never going to be behind on it, and it's you can just give it to your kids. You can
Yeah.
just long term. It's one of the best products out there.
Yeah.
We're trying to Experior is.
I say, can you lobby for it?
Yeah, we're trying to get a product through Manulife that will be exclusive for us.
Yeah.
That acts like an IUL, but again, the regulators and stuff, there's a lot of moving parts to it. I don't know if it's ever going to come to fruition, but we understand that there is other options out there for the consumer that is very beneficial to them. So, but as a Canadian, I think you can buy an IUL, Jacqueline. I think I'm going to give you a call and maybe buy something from you. You know?
Yes, go ahead.
Okay, that's interesting to know.
Yeah, yeah.
Awesome, thank you. Anybody else? Andrea? Yeah, sure, there's a few other people here if you want to jump on and ask any questions you might have.
No, I'm good. It's been a pleasure listening to this. It's awesome.
Okay, awesome.
Hey, Serena, just to let you know, Andrea is I'm the godfather of Experior. Andrea is the godmother of Experior.
Oh,
Stop.
nice.
She's been in the industry a while, but she's really changed our business and created our legacy program, which allows us to be able to give our business to our children and grandchildren,
Yeah, that's significant.
which is huge, and that wouldn't have happened without Andrea. And God bless Andrea, she's living the life of a queen. She's lives part-time, full-time in Jamaica, and also here in Montreal. And
Nice.
where else you go, Andrea, in Edmonton? No?
Yeah, I have a grandbaby in Edmonton as well, and now I have
Edmonton,
another
yeah.
grandbaby in Copenhagen. So
Oh, wow.
Look, look at that. So she doesn't, yeah, and she's been in the industry for as long as I have, and she's just a great addition and an incredible partner to have with Experior. So do
Amazing.
appreciate.
Well, I
Thank
guess
you,
when it
Maura.
comes to things like abundance, prosperity, and wealth, since we're coming up to the hour, is there any closing thoughts that you wanted to leave with anyone or any pearls of wisdom that you want to pass along?
Yeah, well, that wisdom. Most people who know me wouldn't say it's wisdom. It's just having an attitude of caring about others. And you know what? Some people say, you know, especially if you're an A-type personality, you don't hear what I'm saying. But when I look at someone, I look at them at where they're coming from, not who they are, what they have, and what they're doing.
Yeah.
Because I believe everybody wants greatness, everyone wants success in life, everybody wants to be someone, everyone wants to be recognized, everybody wants all that kind of stuff, but something's stopping them from doing it. And it could be whether it be their upbringing, something a coach said, a teacher said, abuse. Everybody's got something. So I try to in life look at people in a way where it's like, there's a reason why she said that. There's a reason why he acted that way.
Yeah.
And I'm not saying lay down and take it. You gotta be strong and fight for what's right,
Yeah.
but also help people in their journey in life. And that my success at Experior and in life in general is because I look at people and value them as who they are and not what they can give me. Because the minute you look at people as something that they can give you, it's just going to be an ugly experience. And that's where I was before.
Yeah.
You don't recruit people or train people just because you can override them and make money from them. You want to find out what makes them tick, why they want to succeed in life, and help them in that journey. And if you can't help them in that journey, move out of the way and let them figure it out and assist them in that way. But yeah, I've never been that type of person who says I know the answers to everything. I probably don't know less than most, but I know people. And I think anything in life, especially in our industry, Serena, our business is people. And if you're only looking at dollar signs, you're gonna get it probably, but it's not gonna have any value. So
Yeah.
that's my advice. Look at people for who they are and what they want to be, not for where they're at and what you think they are in their current state. So yeah.
Awesome. Well, I think that's something great to close it off. Obviously, thank you for taking time out of your busy day to be with us. And for anyone else that has jumped on this call, we have live streamed it to YouTube, so it'll be up there if anyone wants to watch it afterwards. Of course, just remember, when you invest in yourself, the sky's the limit. Thanks again.
Thank you, hon. Take care.
Thank you, guys. Take care. Enjoy the rest of the day.
Thank you.
Have a
You
great
too.
day, everybody.
I appreciate it.
Thank